Good afternoon and welcome to the ActivTrades Monday Market Matters webinar here for the 25th of September. Sorry, we've had a little bit of recurrence of the technical gremlins that we have, but we're here, and as I said, hopefully you can hear me loud and clear and you can see the slides. Great to have you here today, 25th of September. So it's a case of it's the last week of the month, last week of the quarter. It's been a rather eventful month, as I think I may have mentioned a start of this month that we were running into. So lots to talk about, lots to cover, but in terms of our education element today, what we're going to be looking at is your first trading routine. And what this is looking for is to help new traders in particular, pull together their efforts so that they are invariably sort of conducting the best practice when they come to engaging with markets. But for those who are joining us, who are experienced traders, also just, it can help just ensure that you can refine your approach, that you can just basically make sure and sort of sanity check that you're doing the right things when you come to trade markets. Okay, so what should we talk about? Well, as always, we'll talk about Monday market matters. But for our educational element, what we're going to be focusing on is, why are trading routines so important for traders? And we'll talk about what should they include and how can we create a simple trading routine that forms part of our overall trading plan. The interesting thing about this is it is unbelievably important as a topic, and I'll go into my reasons later. And I'll also be talking about, from personal experience in terms of quite a few different industries, and as to why it is why they're helpful, why they're important, and how you can do them best for yourself. With that in mind, it'd be interesting to know, those of you joining us here today for the live session, it'd be interesting to know what, if any, usage of things like routines do you have in your own trading at the moment? Do you have really very clear routines? Are they well written down? Okay, do they form part of an overall trading plan? It'd be great to know if you have. Just put them in the chat box there. It might be a case of that you don't because you're new, but that's great, because that's what these sessions are here for, to help you, just to educate you and put you in the best place possible. But as I said, I'm going to be sharing with you an awful lot of my own experience with regards to your sort of first trading routine. So for those who don't know me, my name's Paul. So I've traded for many years, traded for funds, traded for clients. My focus tends to be on FX indices and commodities. I tend to be a trend trader for my longer term swing and position trades. And I tend to be a mean reversion and a reversal trader for sort of intradays and scalping, all of which plays a role in what we talk about not only today, but in our other Monday Market Matters webinar sessions. So for those who are joining us for the first time, Monday Market Matters is really all about just helping traders start the week in the right frame as we prepare for the opening of the US markets in about 23 minutes. So every Monday at 2 o'clock London time, we look to cover the major news, that's coming out for that week to be aware of. We'll do a major piece on education to help you, build and develop your own trading knowledge. We'll always talk about the tools that are available to you through ActivTrades as a client. And then we'll always finish off with a little bit of a look at the live markets as we start into that US session. So there's always plenty for us to talk about, plenty for us to look at and cover. So let's start with the news. So invariably last week, if those of you who join us on a weekly basis or watch the session, we realised saying that last week was going to be a rather chunky data week, rather eventful week, and it was. Certainly we had the FOMC, okay, in terms of the Mr. Powell and the Fed deciding not to raise rates, but that also happened, with the particularly close to home in terms of the UK, in terms of their CPI numbers, and then the MPC committee meeting not raising interest rates in the UK either, and we will see that, I suspect, as the kind of the new theme at the moment. So they all had an impact on overall asset classes and also on some of the instruments. And of course, we'll flow through that into this week because there's still quite a bit of data coming out this week. And as I said, we're also running in towards the end of the month and the end of the quarter as well. So that all sort of has an impact on the kind of flows that we see. So today already this morning we had the German Business Climate Index. That was a little bit lower than expected, as demonstrating maybe sort of a deteriorating environment. But what people really will be looking forward to is tomorrow we've got the US Consumer Confidence Index is due, along with new home sales. People will be keeping an eye on that to give them an indication of the health of the US economy. Then Wednesday we have, in particular, we have Australia's CPI, and people will be interested to see whether there's any continuation of a possible, let's say, second wave of inflation, to see whether that sort of particularly comes through. But then on Thursday, we have, in terms of, European news, we've got effectively the sort of German CPI, okay, German inflation is what people will be keeping a close eye on. And we also have the US GDP numbers and also home sales. And in the evening, we also have Mr. Powell from the Federal Reserve speaking. On Friday, yes, there is some data coming from China and also some PMIs and UK GDP and also Canadian GDP. But I think what most traders will be looking at is the US core PCE prices, and that is invariably the Federal Reserve's primary inflation measure. That's what Mr. Powell and his chums at the Fed make their decisions based upon. That's really all about the sort of consumer inflation. Excluding kind of food and energy. Food and energy is stripped out, and that is the data that they make their decisions on. So invariably, if that shows a reduction, okay, or a deceleration in inflation figures, well, then that will of course have an impact on markets as traders and investors sort of view how that will impact future FOMC decisions. So, as I said, quite a bit of news, and also end of the month, end of the quarter. I suspect it will be a rather eventful week. Okay, and provide plenty of opportunity for those of you who are prepared. And when it comes to being prepared, one of the best things that we can do is invariably to develop good routines, all right? And in particular, what we're going to talk about is, for those of you who are new traders, those who are just embracing, kind of a trading, this is about developing and implementing your first trading routine. As the slide says, many new traders, they like to think themselves as purely discretionary traders. That they have no real structure, no real system. They just feel that they can, enter, flow in and out of markets. However, what I tend to find, and I can talk from personal experience there, and also from the personal experience of coaching and mentoring lots of traders over the years, is that the more you work at trading, the more traders realise that they do require some structure. And the challenging thing is, like in most endeavours as a human being, very often it takes some failure to realise these particular challenges, okay, or how that lack of structure creates challenges for particular traders. Because if you're intraday trading or scalping markets and you're in fast moving markets, it's very easy to miss important steps in your overall trading plan. And not unsurprisingly, that'll have a detrimental effect on your performance. So, how do we look at providing a solution for that? And that's where you look to building your first trading routine may help you, as I said, in starting to pull together your endeavors, and so that you're engaging in best practice when you're looking to engage with markets. So, for new traders, a new understanding, you might be trying to work out, well, that's great, Paul, but why are routines important? What is it that they give to us? Well, I look at routines help us embed good habits and the best practices in our trading businesses, and in particular, a checklist-based routine can help you enormously as a trader. So, if you've no experience of checklists or you've not had any understanding of them, checklists actually come from military aviation back in the 1920s, 1930s, so about 100 years or so ago, getting towards that. And what happened is, what they found in that kind of golden age of aviation is that as aircraft went from single-engine aircraft to multi-engine aircraft, what they found is that the number of accidents were increasing. And what they found was that as the complexity and the pace of the aircraft increased, the ability to make human errors increased also. And with hindsight, that probably is just an element of common sense. Okay, the more working parts you have, the more engines you have. Okay, the bigger the aircraft, the faster they are, the more likelihood there are to make errors, which can, of course, cause all sorts of problems. And so therefore they created checklists to help ensure that human errors were avoided whenever possible. And the truth is, in that 100 years, in terms of the safety in aviation, it has had a huge impact in terms of the kind of number of crashes that we would have from 100 years ago to what we have now, and an awful lot of that is down to checklists and routines, all right, and the reasons that why they're embedded in every level of aviation. So this is why when you get on an airplane to fly anywhere, okay, if you turn up at the airport and get on an airplane, and it doesn't matter whether you're a passenger in a small little single engine Cessna 172, or you are flying on one of the huge big Airbus A380s, you will still see pilots. They will use checklists to this day, and it doesn't matter if it is their first day on the job as an airline pilot or their last day, okay, after a career of 30, 35 years, they will still be using checklists. The aviation industry, they know that they work. And the aviation industry, you'll find, will spend millions and millions of dollars on building robust checklists that basically cover pretty much every eventuality that a pilot may have to deal with. And so my proposition to yourselves as traders is, if they know they work and they help keep people safe in an environment where the consequences for making failure, are much more severe than trading, well, why wouldn't we as traders want to learn from that and use that to help us to perform at our best, okay, and to help keep us safe? All right, and that's what we start to see with real serious professional traders, and also talking about who else uses them, who else basically develops them. So I do a lot of work myself with veterans, okay, and what they will find is that one of the veterans' edges is that they know that skill is a drill. All right, skill is a drill, and it can be whether you're in the military or whether you're an airline pilot or whether you're an air traffic controller or whether you're a doctor or a nurse in the accident emergency, all those environments know that skill is a drill. They all know that confidence comes from competence, okay, and being competent in the activity that you're engaging with. And that competence comes from developing the new skills, okay, the required skills to be able to operate in that environment. And developing new skills is really all about drill, okay? It's about drill, and drill is just really, it's a process until the response becomes automatic. As I said, they know that skill is a drill. Skill is a drill, and that's how they use it, because it keeps them safe and allows them to operate and perform at their very best. And that is something that we as traders, especially traders operating in very fast-moving markets, that is something that we can learn from, and it's something that we can utilize to make ourselves better as a trader. And if you needed another sort of level of understanding of that, is that a few years ago, sort of a trading psychology house interviewed a fund manager on Wall Street, guys and girls who are running between $1 to $10 billion dollar funds, so really serious professional funds. And what they found was that there was three traits that kept coming back in terms of identifying the individuals and the funds which traded the best, and that was process, discipline, and self-awareness. Those are things that veterans are very comfortable with. It's very comfortable with aviation. As I said, they've got checklists and routines that allows them to follow a process. If you have a process, it becomes easier to be disciplined, all right? It becomes easy to be disciplined because you just need to follow the process, to follow the checklist. And the other element is self-awareness. And self-awareness tends to come from basically reviewing your performance, whether you're a military aviation pilot, okay, whether you're a surgeon, whether you're a Formula One driver, or whether you're a trader. Reviewing your performance is what helps you raise your self-awareness, enables you to basically develop the kind of the skills and knowledge and talent that you need to be the best in a performance environment. And from my own, I can talk about from my own personal experience. So in my youth, when I was involved, in the Air Force in military aviation, there's a photo of me from my glorious youth, many decades ago. But if you want to, so it's something that I am. It's very close to my heart. Something that I've seen, in a visceral way. Okay, it works. And if you want to read more about it, then I always recommend reading this book by Atul Gawande called The Checklist Manifesto. It's not actually a trading book, but the more you read it, you'll realize that actually it is completely fabulous in terms of being applicable to your trading, all right, in terms of helping you be a better trader and a better investor. So, I always recommend the book. I think it's a fabulous book, and it's worth any good trader being able to read and take on board. So that's all well and good, okay? You can get an idea of where routines come from, where those checklists come from, and why they're important. But how and why do we create them as traders? Well, to start with, okay, we can use checklists to create simple daily routines to help us ensure that we miss nothing, and that we are always ensuring that we're doing our major elements, things like risk management, etc. Helps us ensure we're always in the right trading state to operate effectively every day. And then we can also delve deeper and create specific trading checklists for our favorite setups in markets. And together, all of those routines, that can become the basis of a tactical trading plan, which has helped take us towards the success that we're working towards as traders. So, where should we start? What should we do? Okay, so what I normally suggest is that you have simple routines for even things like your start of the day. And I'm going to share with you part of mine in terms of what you do just before you even look to switch on your computers. And then you should also start to build routines for things like pre-market. Okay, what are you doing before your market opens? What are you doing during the market opening? What are you doing in between sessions? So maybe you're trading the European session in the morning, and then you're having a break in between sessions before you start let's say, trading the New York session. What are you doing? Do you have a routine to make sure that you're doing the right things? And then also a simple routine to do post-market. So you can have lots of routines, and my suggestion to all of you is just start. Okay, it's not going to be perfect. It doesn't have to be perfect. But if you haven't already started writing it down, well, then please do. Okay, make an effort to do that, take it on board, and start to put it in place so that you're in a position to basically help yourselves develop and evolve good trading routines. These are best practices that you'll want to utilize in your own trading. And today what I'm going to do is I'm just going to talk a little bit about some of my sort of start of the day routines, just to give you an insight into how I operate myself, and what maybe you could learn and take away yourself in terms of how you'd want to look at operating. In terms of, as I said, I'll just share some insight into my own kind of trading routines at the start of the day, what I'm particularly looking for. Well, one of the simpler ones is like, well, what time do we start? How do we prepare for our trading day? So my suggestion to traders is that, be prepared, be at your desk 30 to 60 minutes before session opens. And I do appreciate we have a truly global audience here. So there'll be some people trading in Europe, trading European session. I appreciate there'll be some people, in maybe in New York or elsewhere in the world trading the American session. There'll be some people watching this and trading the Asian session. So, it is you can amend it to be applicable to your particular trading lifestyle, your trading commitments at the moment. But I always suggest that you be there at your desk 30 to 60 minutes before your session opens. And why is that? Well, the very brutal answer is it's your business. This is your trading business, so you should be taking it seriously. You want to show the market some respect. You want to show your trading some respect. You want to show your capital some respect, and by doing that, it's about getting yourself there before your session starts, so you can prepare accordingly to go through your pre-market trading routine to put yourself in the best place possible to trade well during that upcoming session. Remember, trading is a performance activity, so it is in your best interests to do what needs to be done to put yourself in the best place possible for when you come to sit and engage with markets. So here's a little bit of insight into some of my pre-market routine. Okay, what I'm doing in the mornings. Okay, just give you a little bit of insight. There's a bit more to it, but as a starting place, this is very good. So I would use things like the sleep cycle app, okay, to help me manage my sleep, make sure I'm slept well, make sure that before I sit down at my desk that I've done a bit of stretching, a bit of fuel, a bit of hydration. Normally go for a walk in the morning as well. I consult a book called My Winner's Bible, which is just really about, sort of just helping me focus on, what I'm looking to achieve that day. I have some start of the day questions that I go through to help me. I might write in my journal. It depends upon A, the timing, and B, what happened, but, I would try and put a few lines down there. Some people will like to visualize the session ahead. I tend to focus on gratitude. Boy, what am I grateful for in terms of being able to sit down and do this wonderful job of engaging with markets and trading, from anywhere in the world. I like to listen to a little bit of music as well, get me in the right place. Okay, so probably showing my age, but "Give Me the Prize" by Queen is kind of works on many levels. All right, but you don't have to. You might do your own thing. That's absolutely fine. I'm just sharing you a little bit of insight into my own. I then have a thing called my psychological fitness routine. So I have a matrix that I ask myself and question myself and work on to basically make sure that I'm in the right place. And it's only then do I switch on and fire up my computers. Or I'm doing quite a lot before I've even switched on my computers, okay? And even when I switch on my computers, I'm not jumping into trading. I'm checking the calendar for the upcoming news or how it reacted to overnight news. I look at how did the markets finish on those US indices, okay? Were they bullish, were they bearish? Check what happened in the overnight session, start to try and understand, is there a risk on or a risk off bias? Look at, what the US dollar is doing, especially as an FX trader. And then also have a little look at the futures in terms of, what we might be doing in terms of from where I'm based, looking at the sort of, the DAX and the FTSE futures to give us an indication of, as I said, the kind of overall sentiment. So there's a little bit of insight into my pre-market routine, to a good part of it, and as I said, that's all put down in a checklist, going through to make sure that I'm doing the right things every morning before I even switch on my computers, before I even think, And I have had plenty of coaching clients over the years, who used to, they might roll out of bed 5 minutes before the DAX opened and look to trade, and then wonder why they were struggling. Because actually, they just weren't prepared. As I said, you should show the market some respect. You should show your business some respect. You show your capital some respect by putting in places things like small routines like this that you can check through that basically allow you to make sure that you're doing the right thing. Okay, that you're putting yourself in the best place every single day. The good thing and the element, the good part of it is that having that checklist-based routine, as it develops into what I would call like a tactical trading plan alongside your strategic business plan, what that does is it provides you with some structure. Okay, it also provides you with consistency. You're doing the right thing every day. By having that routine and having that consistency, that is what helps build discipline. And what tends to happen is, when you're being consistent and disciplined, this is when we start to see things like it reduces the number of errors you make. Okay, reduces the, let's call them emotional leakages, whereby we see sort of traders maybe make sort of impulsive, rash decisions based upon things that are happening in the market rather than actually following their own routine and plan. By doing all these things, it also helps increase your own productivity because you're making sure you're doing the right things at the right time, rather than just basically being distracted by, all things left, right, and center, which generally tends to help reduce trader stress levels, and that's always a good thing. You want to be in a position to operate from being grounded, from being in a good place. Okay, when you sit down to trade and knowing that before you've even switched on your charts, that you've put yourself into a good place to be able to trade as well as you possibly can for this session that's coming upon you. And the overall effect is that generally tends to improve results. Okay, and not on just a one-by-one basis. What I mean by that is you don't just do it for one day and it flips your trading, but as you make it part of your overall trading business, it's the way you conduct yourself. It's the way you actually follow that routine. It's about you embedding best practices into your trading. And the reality is, lots of people will look at that and think, well, do you know what, Paul? That looks like a bit too much work for me. I think I'm just going to carry on as I am, and that's fine. That's your choices. But what I will say is that I've had the fortune to trade alongside, work with, coach some absolutely fantastic tier one great traders who run hundreds of $1 million of trading books, and none of them have been sustainably successful without having things like checklist based routines, tactical trading plans in place to ensure that they basically operate correctly in a day-to-day business. It really it's just something I see constantly through all the good traders I work with. They're all doing that. Okay, so this is an opportunity for you to learn, take on board from that, and start to put these in place for your own trading business. And as I said, for those of you who are here today joining, it'd be fascinating to know how many of you here today, actually have a plan, a trading plan in place. They have have checklists, routines, etc. It'd be interesting to know what level you have them to at the moment, all right? And maybe you haven't, maybe because you're new to trading, but hopefully this will help sort of convince you that this is a very good way to conduct yourself going forward. So when it comes to creating, your first trading routine, how do you create one? All right, what do you have to do? What do you have to do to make it, sensible? Well, what I've found from my own experience and from what I've learned from other industries and environments and from other traders I've worked with is that in an ideal world, okay, for a trading routine to begin with should be a single page. Okay, it could be A4, A5, A3 if you want to stick it on pin it to the wall so you can see it. It should be simple and easy to interpret. And what I mean by that is that you can almost give it to your 10-year-old child, and they should be able to follow it, and they should be able to trade from it. Because if they can do that, that means that you're in charge of your business, you're in control of your business, you understand what's doing. If there's not, there's huge gaps. So that in itself is showing up areas that you need to work upon. They should also define your risk management principles, all right? Where as long with where you enter a trade, but also where do you exit a trade when you're wrong, okay, when the trade idea hasn't worked out, and also where do you normally exit when the trade has worked out and is running in your particular favor. All these, as I said, all these elements should be a single page checklist style, all right, and then invariably you're in a position to work through it. Remember the slide we talked about before where we're saying that skill is a drill, right? Doing this every day, this is what the sort of thing, as I said, it starts to separate the wheat from the chaff, okay, in terms of how you look to operate as a trader going forward. So what you can do here is and I'm just giving you a little bit of an example here is that can also sort of evolve into your overall during the day tactical trading plan. Okay, so for example, here's a little task to set yourself away here. This is a screenshot of one of my own pin bar checklists. So if you were to trade pin bars, rejection candles, I mean, it could be adapted to anything. It's about having an easy to build, a simple checklist for your favorite trading setup. Maybe it is trading a price action. Maybe it's a breakout. Okay, maybe it is some of the elements of smart money concepts that we talked about. Maybe you have a fundamental bias. It doesn't really matter. However you look to engage, it's easy to build a simple checklist for your favorite trading setups, and and it doesn't have to be perfect. And the reality is, it probably isn't going to be. You could trial and refine as you take your trades, as you build up a wealth of experience in that. And what will happen is, as an added benefit, is that the more you do it, the more you will identify your strengths as a trader. You will also uncover your weaknesses, and that's okay. You're a human being. We all have weaknesses, right? And remember what I said earlier, it's about having the self-awareness to be able to recognize that and then to find, solutions. And part of those solutions might be discovering the areas for your development as a trader, and that also allows you to train yourself until the process becomes automatic. And once that process does become automatic, that also helps build things like your self-confidence, your self-belief, and also your self-trust, elements that don't always get talked about as a trader, but actually are unbelievably important to you as a trader. All right, they really genuinely are. So all of these things, it becomes a very virtuous circle. Okay, a virtuous circle which helps you just improve and get better inside. In terms of the way you conduct yourself as a trader. And that's what we want, and that's what I want for you as a trader in that particular sense. So, as I said, you can see that there is just like a little, I've got just a little checklist there just for one particular setup here. Okay, it has the details of the date, okay, and the day, what time is it, what instrument, what's the trade number that I'm looking at, okay, and I can just tick it off as I've completed it. What's my trend, okay, is it up, is it down? The SNAM is my own proprietary tool there to identify strength and weakness. What's the market? Is it sideways? Okay, has it been ranging, or has it been choppy? Okay, what is it? So even just having to tick those forces me to sort of just recognize what it is. When I'm looking at the individual pin bar, does it have the significant wick length? Okay, is it 2 to 3 times the body? Is it a significant size? Okay, is it a good size pin bar? Is it the same direction as a trend? Is it a reversal pin bar? Or is it a momentum pin bar? And is the body inside the previous bar's range? These are all little rules I have for ensuring that I only take the best pin bar setups. Is there a confluence of events? Okay, is it like bouncing off a moving average, or is it off support resistance, or a trend line, or a big round number? Is there a confluence of events there? And what was the trade? Okay, what was what did I do? Was I a buyer or was I a seller? Okay, and in which case, what was the price? Okay, what was my particular open style? What did I use as the trigger? Where did my stop loss go? And also, what were my exits? Okay, in terms of being exits on the right side of it. So that might seem like quite a bit of work, but actually, when you're trading there, remember, I'm looking to only just make sure I can tick it off, put down the significant details, so that I've always got that information. That I can use it as part of my review to help build my self-awareness, also to make sure that my trade journal, my trade spreadsheet is updated, but also, I will do that and also print off a screen of the chart and annotate that, and so that all goes together towards building up my trade journal. So, as I said, it looks like there's a lot of information there, but actually it's quite quick. You can quickly go through it. With a little bit of practice, tick tick tick, you can do it. So, if you might want to take a screenshot of this particular page here that we're talking on, if you wanted some help on that, if you're just starting off. Okay, but that's the sort of thing that I look to have created for myself, and it's the sort of thing that I see good traders really do as well. Okay, as they build up their style of doing business in markets. So before we switch across to the live charts, okay, remember. Money Markets Matters is here every Monday, London, 2:00 time. As I put there at the start of the year, it's going to be an interesting year in markets, and it has been. And I do not think that is over. I think as we go here towards the last calendar sort of quarter of the year, I think it's going to be even more interesting. So I hope you'll be able to join us to enjoy this journey. So based on what we talked about, building routines, they are a great way to embed good habits and best practice in your trading endeavors. And one of the things is a checklist, using a checklist. And checklists came out of the increasing complexity that was experienced in military aviation about 100 years ago. Today, they're used actually by many, many industries. And the reason they're used is because they work, right? And so traders can learn from them and use them to bring an element of consistency to their performance in terms of, making sure you're doing the right thing day in, day out for your trading. What I suggest is use a checklist-based routine allows you to ensure that you do not miss anything, okay, that you make sure that you're doing the right things, which is important, especially, in what might be a very volatile or fast-moving market. And it also allows you to drill your actions until it becomes an automatic response. Remember, that's what I was saying earlier in those slides. Skill is a drill, right? Skill is a drill, right? And you just practice it until your response becomes automatic, and that's what you're particularly looking for. So with that in mind, let's switch across and have a look at the live markets and see how markets are shaping up for this particular week ahead. But before we do that, just a reminder, okay, that Money Market Matters next week, okay, London, 2:00 Monday. What we're going to talk about in the education arm is how to use fractals to start your week. So you may have an understanding of fractals, you may not, okay, we can learn about that. But equally also, how do we use fractals to start our week in terms of just helping us create a very simple trade setup, just using fractals at the start of the week. All right, so be sure to sign up and join us for that. You can see you've got the QR code there. Take a screenshot of that on your mobile, and that'll take you can sign up and make sure you register and come and join us. Okay, there'll be a quite an interesting insight for us. So as always, if you've got any questions or comments, okay, you can get in touch with us, ActivTrades, okay, the English desk number 0207 6500 567, or you can email englishdesk@activetrades.com. Perhaps you've got some feedback, perhaps you want to have a look at some of the previous sessions we've done. Perhaps you've got suggestions, maybe there's something you'd like to see me cover in future, in which case I'm very happy. This is your opportunity. You can email that in and we'll be very happy to take that on board. We want to make our sessions as beneficial and valuable for you as possible. So if you just bear with us a moment, what we'll do is we'll switch across to the ActivTrades platform, have a look at that, and look at how markets are setting up and how we've started this particular week. So as I said, just bear with us a moment and we'll switch across. Okay, so I'm hoping that you can still hear me. I'm hoping that you can see the ActivTrades platform here. And this is my kind of indices commodities platform that I just start to do my big analysis on. Let's just get the old pen up here. So this would be the Dow Jones, and this would be the Nasdaq. This is the S&P 500. This is the Russell 2000, the German DAX, the Japanese Nikkei, the UK FTSE 100, and then also crude oil there. So the idea being that, I can see very quickly, just take a snapshot of the overall global indices and get an idea of, what's the trend, what's the sentiment, what is the, are there any particular setups, okay, that I want to be aware of? Are there anything that I particularly need to look at and take on board? And, if we just look at here, one of the reasons I wanted to start this week was, let me just set this up here properly. I'm just going to put these all onto the weekly here so we can just hopefully get an idea of them. So if you remember what we had last week, this was the Dow, as I said. What became last Monday, okay, what we'd had the week before was, we'd had a bearish rejection candle, okay, bearish pin bar, and basically forming lower highs. On the Nasdaq the week before last, what we had was a small inside bar pin bar, okay, which was also lower highs, right? And we were just saying that we thought it was more likely to have a bit of a bearish bias. The S&P 500 also the same. We had lower highs, and then the week before last we had once again an inside bar pin bar, okay, that we were interested in. And the Russell had already basically started to move. Russell was leading the way. So, we were looking at that at the start of the FOMC week to realize that we had, quite a bearish bias. And hopefully you can see there, the kind of last week there, that's what actually how it played out. Okay, certainly for the big major and those major US indices. And that's always an important thing for us. So, even if you're an intraday trader, being able to understand this bigger picture can help you, whether you be a position trader, a swing trader, an intraday trader, scalper, understanding, where the most likely flow is in terms of direction, that can help you enormously as a trader. Sometimes it'll be very clear, like those examples we saw there. Other times it's not, but that's okay. Even if it's not, that doesn't mean your analysis is terrible. That doesn't mean you're a terrible trader. There will just be period of times when markets are going through transition and they will look choppy and volatile, and you might have been trading for 2 decades, but you could still be scratching your head trying to understand what's going on. That's okay. But in this particular case, that is what we saw going into last week. And so our thought would be, well, will that continue this week, okay, as we run towards the sort of end of the end of the month and end of the quarter. And certainly my 50p movement, I wouldn't surprise me if we drifted our way down there. We can see that they're very close there on the S&P 500 and the Dow, and I wouldn't be particularly surprised if that did occur. And what I look at here for it is that here the S&P 500. S&P 500, having had that great run up there at the start of the summer, we peaked out here. This is now a lower high, and actually, we were looking at kind of this, we're getting lower highs here, getting lower highs, and knowing that we've now broken that particular level and closed beneath it. Now, it would not surprise me. I think if we may have moved up and then basically sort of rolled over, that's what we might be looking at in terms of the price. But that would still, to me, at this moment, look at the likelihood of there being a kind of a bearish sentiment, okay, a bearish draw on the way that it's operating, and that's absolutely fine. I'm very happy to work with that. If we go into the daily chart on the S&P 500, you can see that as well. All right, okay, that last week was a very, very strong week in terms of being able to do that. That's the 4-hour chart. We can see that, after the FOMC announcement, it just accelerated away. Okay, and that's as traders, that's our job to analyze that and find a way to basically engage with that. And so I would be taking that on board with that. if you look on the flip side, well, as indices have come off, well, actually, what we have seen over the last couple of months is that oil has basically, oil has strengthened. It's strengthened here from where it was down at the weekly 200 period moving average earlier in the year, and you can see it's just strengthened its way there. And we broke through what had been the highs of the year, and we've continued to work our way up there. Okay. We've continued to work away, even though we had sort of an indecision candle there. Okay, that has still been that's been still kind of strong. It's been still kind of bullish. It's holding 90. Okay, and people will be starting to ask questions about, well, does it have what it takes to sort of go to 100? That's what people will be interested in, and that's what I think we'll find that out over the next couple of weeks. It's if it might be a bit harder if the activity start to roll over and drop higher, well, that would indicate that there is less demand for them, which means there'll be less demand for oil, which might sort of take the wind out of the sails for oil. But as I said, this next kind of few weeks will be key in that. A little bit closer to home, what I wanted to look at is FTSE. This is the FTSE weekly chart, and has been it's been a really rather volatile year. It's been a really, very difficult year to trade if you're a position trader looking to take a position for maybe weeks, months, or years, because we just had real strong swings there, left, right, and centre. Very difficult. But what we saw was actually we did have a bit of a bullish push there, okay, on the weekly chart. We got recent highs. Kind of what was interesting to me was that when I go down to the daily chart, even though we'd kind of rallied up, if you look at that over the last week, to me, let's just get up. So, to me, having kind of basically hit a high there, well, every high is lower, isn't it? And we're getting lots of wicks to that upside. So it's no surprise that today we kind of popped up a little bit, but then have dropped our way down. And it wouldn't surprise me if we kind of worked our way down to this zone here between the 20 and the 50. That's what I'll be looking for on the FTSE, especially if there is overall a kind of a bearish slant on the markets there. If you look at another commodity, gold, I know lots of people like to trade gold and look at it. So this is gold on the weekly chart. I personally still see this as basically, I think I still see this as prices coiling up. As I said, excuse my drawing, but hopefully get the sentiment of what we're looking at. And I think that is price coiling up there. And I look at that as maybe this is a reflection of what we'll see with the dollar, and we'll look at the dollar chart in a moment. But that would be my view at the moment. And personally, when I see price coiling up like that, I tend to be quite happy to let price do its thing, and then wait for price to make its move, and then look to follow it if a trend develops out of it. When price is coiling up like that, I don't try to predict ahead. I'm very happy to let the market just show me the way. All right, and that works for me. And that's confirmed when I look at silver. Okay, another instrument that is tradable through ActivTrades. Once again, this is a weekly chart, and I would see that as basically as that price sort of just coiling up. It's compressing together. You can see that. Hopefully, you can see that the highs are getting low, the lows are getting higher. Okay, it's just getting tighter and tighter. And I'm sure you'll know. Anything in life like that. We're basically just coiling up, gets tight before it explodes, and that's what we're looking to see. Whether that can occur over the next couple of weeks. So it's something you just add to your watch list and keep a look at. And as I said, when we look at things like gold and silver, Bitcoin and other instruments and commodities, I personally think a lot of that is still driven by what's going on with the US dollar. And let me just bring this up here. This is my here we go, and this is my US dollar profile. Okay, they're on the ActivTrades platform. So I've got Aussie dollar, Euro dollar, pound dollar, dollar Swiss franc, Kiwi dollar, dollar Canadian, dollar yen, and the dollar index. And that allows me to get a very quick understanding on the dollar. Is the dollar active? Is the dollar bullish? Is the dollar moving strongly in a trend, or is the dollar just going sideways? Is it going to sleep? Because that can be enormously helpful as an FX trader, just to get an idea of what the dollar's looking to do. And if I look at it here, this is the dollar index, and interestingly, monthly chart here is. We've been looking at that, and for most of that part, most of that year we've been in the range. Okay, but we popped down and we dropped down, pushed up, and that's following through. Okay, on the weekly chart. If I look at the weekly chart here, we talked about this last week as well. Is that that has just been quite some really super strong, bullish dollar trend there. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We've had 10 weeks, 10 bullish weeks, and I think I might have said the same last week. Is that I have no idea when was the last time we had 10 continuous bullish weeks together. Okay, and I'm sure there's a stock market historian who can work that out for me, but that doesn't happen very, very often. And where we are is we here in March of earlier this year we had a high there at 105.48, and actually what we're seeing, I was talking earlier about how we were just sat underneath it, that level, but you can see as we've gone into the start of the American session, that has basically, you can see for yourself as Bosch, we've had that move there, it's broken through, and now I'm looking to see, well, all right, okay, what does the market want to do? Okay, it's broken to these new highs. Is it going to effectively come back, retest, and then basically just hold here before it takes off again? That's what lots of breakout traders, lots of kind of positive upbeat traders would look for, but others would be looking for, well, okay, we've broke through the highs there. Is it a case of that's enough, and actually we're going to come down and then try and retest and it fall before we drop our way down there? So so this is going to be interesting times for the dollar, right? And as I said, I'll be watching this over the next few days to see how exactly does it play out, right? Because if you can identify and understand, whether the dollar is strong or weak, well, then by its very inclination, you can use that as correlation with other particular instruments. So if we look at, for example, dollar against Swiss franc on the weekly chart, on the weekly chart, that looks just a bit like the dollar index chart that we've spoken about. And that's because there's just a great deal of similarities. If we go down to the daily chart, hopefully you can see that it's been a great trend for a couple of months, and invariably, that trend has accelerated, okay, over the last few days, and you can see for yourself it's accelerating that. So that's that indication of dollar strength, and in this case Swiss franc weakness. If you look at the other big currency, okay, euro against US dollar, that, as you can see that whereas the dollar index was rising higher and higher, inversely correlates against the euro dollar, and you can see for yourself that it's been dropping its way down there. And now we've got a couple of weeks where we've literally closed the other side of the 50-period moving average. That to me is an indication of that kind of weakness there. If I go down to the daily chart, if you just look at that, okay, in terms of from mid-July to sort of end of September, that sort of kind of what would be between 6 to 8 weeks worth of a trend, and hopefully you can see that how that has particularly played its way out there. That's been quite some movement there, and that's just an indication of euro weakness and dollar strength. That's what we can clearly see. There, and that flows through into other things. So the dollar against the Japanese yen. Okay, we can see that dollar against Japanese yen. That strength has continued. We're up now trading at 148.76, 78. So people will be interested at can it shoot up to the big round number of 150? If you can see from last year, we really accelerated up there, and then we basically turned around and fell away. Okay, and people will be interested to see, well, is that going to do that again? Okay, is that move going to get it up there? Because in many ways that would suit some traders, but we'll have to see whether that plays itself out. So let's have a look at how the indices have opened to begin with this Monday. Okay, so excuse me. If you look at the S&P 500, this is the 30-minute chart. Actually this morning, okay, in the European session, we had a bit of a false breakout, and we dropped our way down. And it's interesting as we dropped away into we've actually started the session on a kind of a little bit of a bump there. Okay, a little, after the European session of drifting, we're kind of trying to break up there. Okay, we've put in a low there. Wouldn't surprise me now if what we saw perhaps having kind of worked our way through that, just to see, do we come down into this zone here, give ourselves effectively a higher low. So we'll have this low, higher low, another low here. Okay, that would give an opportunity to base before price sort of rallied higher from that. That would be the kind of the next first move. Lots of traders will be particularly looking at. So you might want to add that to your watch list to see how that particularly plays out. You can see it's happening on the Nasdaq as well. The Nasdaq, for most of the European session, in fact, since most of Friday afternoon, okay, you can see that price has worked its way down, and actually what we've seen there is, as the market is open this afternoon, seeing a little bit of bullish, some kind of bullish maneuvers into that. So let's just have a little, and the daily, it's not, just having a little look here. Okay, going down through the time frames, the 30 minutes, as it seems to have moved its way up there. It's popping its way. So, you might say that, here we go. There was a bit of a double bottom there, okay, at the previous low. And from that, we've accelerated up and away, okay. So, there's a little bit of bullishness there, right, on the Nasdaq. But I've been looking at seeing, well, actually, for me, it would need to get back up to, at least 14,900. 14,900 would be the starting point to see how it plays out, and whether it has the strength to basically to carry on in that particular direction. And that's what I think that's what we'll learn this afternoon on that, on this particular on the Nasdaq. Okay, does it have what it takes to basically to continue, or is this just a little bit of a reaction to sort of last week's data and stuff? If we look on the daily chart, it doesn't want to break lower. It just is quite happy at the moment to just create itself as a false breakout, and we'd have to wait and see how that particularly plays itself out. I think it might have a bit more to go in terms of how it looks to move. If we can see it, Russell, okay, and Russell isn't something I particularly trade myself, but I always include it when I have my US indices, because what I like to see, as I've said it before, is I like to see correlation. I like to see all of the instruments moving together. That gives me confidence that the algos are in charge and they're doing their business, and when I want to just basically run with them and not too fussed them up. You can see for yourself that really is that's really quite some move there. For someone's really just really achieved something. It's kind of really been, that's quite some bump, and not unsurprisingly, it's dragging the others up there along with it. Okay, ladies and gentlemen, let's we'll draw it to a close there. Thank you very much for joining us for the session. Okay, and as I said, it's going to be another interesting week, so make sure you keep your powder dry. Okay, in terms of running into the end of the month and the end of the quarter, so make sure that you're on top of what you're looking to do. I hope you found that useful. I hope that's given you a bit of insight into your first trading routine. Okay, if you haven't got one, start working on one, start developing one. It doesn't have to be perfect. Just start to build one for you, and I guarantee you it'll help you in terms of your evolution and development as a trader. Remember, next Monday, okay, which will be 2nd of October, we have the Monday Market Matters. It'll be London, 2:00 time. We're going to talk about your first kind of trading setup of the week using fractals. Okay, we're going to explain that as just a simple trading setup you can use at the start of your week that basically just utilizes fractals and some of the price action details that we've covered here so far in a session. So be sure to join us for that. Okay, ladies and gentlemen, have yourself a fabulous trading week. I hope you have a great week ahead, and I look forward to speaking to you next Monday on the ActivTrades Monday Market Matters webinar. Trade well, everybody. Cheers.